All right, today let's talk about the labor market and why it's cooling and cooling for three very different reasons at once. Because it's easy to blame artificial intelligence and AI, but we think the story runs a little deeper here. And the slowdown actually reflects structural shifts that started years ago, and understanding them helps keep us grounded as investors. So first, let's start with let's go back to 2020 and talk about pandemic era hiring, right? That hiring wasn't built to last. Coming out of COVID, job openings exploded. They were at more than 12 million at one point. And companies tried to catch up with a lot of pent up demand there. It was one of the most employee friendly markets we've ever seen. But much of that hiring was fueled by what? It was fueled by stimulus, short term demand, not sustainable growth. Now we're watching the other side of that wave, right? Businesses are right sizing, trying to get back to normal levels of hiring. Second, the Fed turned off the easy money spout. When the Fed began hiking rates in 2022, that cheap capital disappeared. Expansion plans obviously slowed when the cheap money goes away, hiring froze, and the job market lost one of its biggest tailwinds, propelling all those jobs. So over the last 2 years, job openings have drifted lower, not because the economy is collapsing, but because companies have become more selective in a normal environment. Makes sense, right? So third, we're going to get to the AI here, AI and productivity shifts. Obviously, AI is going to be part of this story. Tools like ChatGPT have boosted productivity and basically changed how work gets done for those that have adopted them. Some companies are using it as a justification for layoffs, but others are using it to do more with less labor. This isn't a collapse, it's a reallocation. Routine work is obviously going to be shrinking here in this environment, but the value of human judgment and adaptability is going to be rising here. So what's the takeaway for investors? Well, first, for workers, it's you better evolve with the tools, right? Don't resist them. For investors, it's look for companies that are turning, productivity into lasting profit, not just, cutting headcount to take advantage of a short-term margin bump. Who's getting more productive with less labor? That's who we're looking for here. So bottom line, the labor market isn't breaking down, it's recalibrating, which makes sense. And like most transitions, that's going to feel uncomfortable in the moment, but it's how progress works, it's how progress takes root. So as always, stay patient while you're investing, stay curious while you're investing, and above all, stay invested.